Stephen Carroll. Let's start with the banks here in Europe. Finance ministers have now finalised a major change to the sector.
Yeah, that's right. It's taken 6 meetings over the past 2 weeks to get this deal done. But finally, EU finance ministers, all 28 of them, agreed on the banking union deal late last night in Brussels. The idea is to ensure that taxpayers don't have to pay if a bank goes under in their country. The system will apply in all Eurozone countries and any others that want to join it as well. Oliver Farry has the details.
The European Banking Union deal aims to prevent member states getting burned by bad banks, but it came about only after protracted negotiations. Brussels will have a range of new powers to curtail the effects of banking failures. The deal will add to the existing supervision by the ECB, a new agency to wind up failing banks, and deposits under €100,000 will be guaranteed. The new agency, known as the Single Resolution Mechanism, will close toxic banks before things get out of hand.
We are introducing revolutionary changes to Europe's financial sector so that taxpayers no longer foot the bill.
Banks will also be expected to contribute to a special fund for bank closures to be phased in over 10 years. But that's unlikely to be enough, and additional financing may come from the Eurozone bailout fund, the European Stability Mechanism. That's a sticking point among certain EU members, particularly Germany. Nonetheless, the German finance minister said the deal was the right way forward.
This is an important step. It was very controversial for a long time because the interests here varied widely. That's why I think what we're building is the right contribution to further stabilising financial markets.
The deal now goes to the European Parliament, where it is hoped it will be passed before the current Parliament's term ends in May.
To the United States next, where we finally get an answer to this very important and ongoing financial riddle. To taper or not to taper, Stephen?
I can just tell that you're thrilled by this, Shona. This is the ongoing debate over whether or not the Federal Reserve should rein in its monetary stimulus. I've been calling it the economic hokey-cokey of the year. So the Federal Reserve has decided to take its left leg out of bond buying and reduce the amount of money it's pumping into the American economy by $10 billion a month. At the moment, it's putting in $85 billion. That'll come down to $75 billion in January. Now, Chairman Ben Bernanke says this is because there are signs that the US economy is improving. There won't be any change to interest rates for the moment, though. They're going to stay at their current low levels until unemployment goes below 6.5%. It's currently at 7%. Now, this was Ben Bernanke's last press conference as Fed chairman. He's due to be replaced by Janet Yellen. She's expected to be confirmed by the Senate this week. But Ben Bernanke says she's in full agreement with this reduction in stimulus.
Today's policy actions reflect the committee's assessment that the economy is continuing to make progress, but that it also has much farther to travel before conditions can be judged normal. The recovery clearly remains far from complete, with unemployment still elevated and with both underemployment and long-term unemployment still major concerns.
Now, the markets were massively relieved by that news from the Federal Reserve. Wall Street, in fact, hitting record highs after that particular announcement. That's because there had been fears that they would have to take much more drastic steps.
I think the $10 billion initial taper was a good number. It's more symbolic, perhaps, than it is substantive. But I think the Fed wanted to signal to the market that they're beginning to unwind the program, but they're still going to be data dependent.
Going to go back and take a look now at what the reaction on the markets today has been. After those highs on Wall Street, it did follow into Asia, early trading in Asia. The Nikkei, though, only staying largely in the green. That's because the value of the yen fell after that decision from the Federal Reserve. Here in Europe, confident start to the day's trading. All of the main markets pretty significantly in the green. All of the main European banks are up after that decision by the Fed, and also that news coming from Brussels about the banking union deal in Paris. Societe Generale up 1.6%, while Commerzbank in Germany is up by more than 2%.
To Washington now, where lawmakers have actually managed to approve a budget.
Hard to believe, isn't it, after all these times we've talked about them plunging off the fiscal cliff and running up against a debt ceiling. The compromise deal has finally been passed by the Senate. It sets out the spending limits for the next 2 years, an increase slightly on what they had previously decided, includes increased spending on defence and some other domestic programmes, but will increase pension contributions for federal workers and also add a charge to internal flights within the United States. Now, President Obama has to sign the budget into law. He says he's pleased with the deal, which will cut the deficit by $23 billion.
Next, on to a Brazilian decision on who to buy its fighter jets from. And that's causing some controversy.
Yeah, after a decade of on and off negotiations, it was Sweden's Saab that won the $4.5 billion contract to supply 36 new fighter jets to Brazil by 2020. Now, Saab beat competition from France's Dassault and from Boeing as well. One Brazilian government source said it was the NSA spying scandal that cost the American firm the contract. Now, France considers that it's been particularly hard hit by this decision. It had expected that it would sell its Rafale jets to Brazil for this. It would be their first major sale abroad. Now, the defence minister, Jean-Yves Le Drian, speaking this morning, has said that he's hopeful planned sales will still go ahead in India, while shares in Dassault are down 7.3% as trading begun in Paris this morning. So that company obviously feeling the pinch.
All right. Thank you very much, Stephen Carroll. Those were the business headlines this morning. Now it's time to take a look at what's making news in the international press with Florence Villamino. Hi, Florence.